Okay, do one by one, no worries. Anyway, we have to do anyway. Okay, so I'm gonna open one Excel file. Just hang on. Can you see the Excel? Is it sufficient?
Yeah. I can see
Wait.
the Excel.
Okay. Just hang on 1 second. Okay. Always. So this is your question number 1, right? Final
What's
account.
this? 381, yeah?
Yeah, 381.
Okay.
Price 12.1.
Hold on, 381.
Hmm.
So this is like this is the proper exam questions now.
Yeah, proper exam questions. So
Okay.
profit and loss, we need to prepare. Always jump to the requirement first.
Yes.
It says prepare statement of profit and loss, other comprehensive income. Okay, for the dates are really important. So we know for which account is it. Are we making 6-month account? Are we making 12-month account or 3 months account? So
Yeah.
31st, this is our year end, and
Yeah.
statement of financial position is this. So this is the name Pricewell. So all you need to do is always give the question reference, or this is what I do: copy this and paste it on the question. So this is you are giving question, answer of this question, but here it's an Excel. So it's best 382. I would, so this will clear the examiner that you're actually attempting for this question. Suppose question number 1, part A. And then now you write this: Pricewell statement of profit and loss for the year ended 31st March 20x9. So this is your statement. Now, after this, you will have to prepare the statement of financial position. So again,
Yes.
Pricewell statement of financial position as at 31st December for March to X9. So they did this. Okay, but now if it is in dollars, and if you are doing it in thousands, you're rounding in thousands. Either you can write this or 000. This, so it gives the examiner idea that you're rounding this off in thousands. All the figures will be in thousands, so we might need 2 of them. Okay, so this is our main format. Do not do anything in main format. So we need some more space here. So I'm gonna join 2 lines here. So it looks different. So it means you are gonna do the working here.
Or can you do it underneath, or it doesn't really matter?
It doesn't matter, but I do it
Okay.
in like I prepare all the working here on the front page.
Okay,
You can
fine.
do anywhere, or you can do anywhere workings.
Okay.
Always link to the working. So first read the question now. It
Yes.
is either you can read the trial. This is our trial balance. Either you can go to the trial balance or
Yeah.
go jump to the these ones. Can you see the
Mhm.
highlights? Is being highlighted.
Yes. Yes.
Yeah.
Yes. Yes.
So
Yes. Yes. Yes.
yeah. So this is what I did. So I always jump to the adjustments. Go for the
Mm.
adjustments, and then you can copy and paste. Copy and paste. Easy. It's quite easy then.
Okay.
Okay. Now this following note are relevant. 8%. Okay. Now what's this? What they say? Just let's read it.
Mhm.
So say that 8% of 30 million convertible loan note were issued on 1st April X0 and our was X March X1. It means for full 1 year we hold it.
Mhm.
Interest is payable in arrears each year. Okay, the
Mhm.
loan note is redeemable at par on 31st
Mhm.
or convertible in equity shares. Okay,
Mhm.
on
Mhm.
the basis of 30 equity shares for each. Here, you remember we do before I start doing any calculation,
Mhm.
I wanted to tell you. Remember we used to do this. Um, convertible loan. We have two
You split
things.
accounting.
Yes.
You have a
So
liability and equity.
equity and that one we will split those two, and then we will
Yes.
create this one.
Mhm.
Just hang on, I'll show you.
By the way, you know the
Mhm.
writing, yeah?
Mhm.
You know the way how much it looks so chunky,
Mhm.
it looks scary. It looks like there's a
Yeah,
lot of
yeah, yeah.
information.
Yeah, true. But we will extract the information out of this, and then we will make it good, look good. You can say.
Yeah.
I'll show you how to treat.
You watching the match? No. Burnley, Liverpool. Okay. Mm-hmm.
Okay,
Liverpool.
and then let's read the question. Where is it? Okay, so eight. So first one is let's see if we have any. Oh, come on. Oh, sorry, I jumped to the.
Next question.
Yeah, I
No,
jumped to the
that's
next question. Sorry, sorry, sorry.
yeah. That's
So
okay.
this is our price well is ours. I
Mm-hmm.
jumped on the next one. That's why I was okay now. So leasehold. These are these. So first jump to this question now. Oops. Now I'm gonna make this one. So let's read it. So
Mm-hmm.
is
You know
it
what you could do? You can move the screen a little bit. You know, like if you yeah, and then put it on the one side of yeah, like that. You can move it to the right. Yeah. And then you can have the Excel.
can you still see it?
Yeah, I can still see it.
Okay,
And
now
then yeah,
I can
they can see
make it
both.
big. Now I
Yeah,
can
you
make
can
it
make it
big.
bigger. And then you can, yeah, like that.
Okay, now let's read it.
Yeah.
Okay, let's see. See, this is our trial balance. So we will not go jump to the trial balance first. We will jump to the uh, these ones
Questions. Wait, hold on. I think
adjustments.
wait, what one is this? 'Cause I think it's
It's
go up again.
381
Okay,
price
yeah,
well.
fine. Yeah. Oh, was the other one the other question?
Yeah. I jumped
Okay.
because I was reading this and then I jumped to this one.
To this. Yeah,
Yeah.
yeah, yeah,
So we will
yeah.
do that one later. We will do that one later, but we'll do this one
Okay,
first.
fine.
So
All
it
right, let's
gives you
go.
an idea how it works. So 15
Okay,
year of
cool.
a lease liability, leasehold property
Mm-hmm.
was acquired on 1st April X7. So our
Mm-hmm.
was X9. It means
9x9.
X7,
It's
X8.
2 years before.
Yes, 2 years. So we just keep
Mm-hmm.
in mind this is gonna be 2 years.
Mm-hmm.
Okay, the next one is 15 year of lease liability. Let me read next one. And let me see if it is trial balance leasehold property is this. So now you will see leasehold and we have the leasehold
Mm-hmm.
property here. So anything related to leasehold, you can highlight. I can't highlight, but in a physical exam, you can highlight. This is a leasehold, anything related to
Yeah,
the
I
leasehold.
think you can, you can.
No, I opened it on, let me see if I can. Oh
Yeah.
yeah, the leasehold, this one we're gonna use
Yeah.
in this. lease payment we're
Mhm.
gonna use it, and this one we're gonna use it. So let me
Okay.
check now. I'll jump to the question again.
Mhm.
So these are all our non-current assets. Where is question? Okay. So the question is 15-year of leasehold was acquired at first at a cost of 30 million.
Million. Yes.
So this is our lease cost. Okay. The policy is to revalue the property at fair value at each year end. Okay. The valuation of the trial balance is 25.2 million, led to an impairment charge of 2.8. Okay,
Mhm.
and I'm just reading it. Then I will like show you the calculations.
Mhm.
Yes, I know where is it. And yeah, 30 million. Okay, and 25,200. Okay, now I'll show you. So I'm gonna recap here. So is this one is leasehold working. You always do this. W1. It means this is for working one
One. Yeah.
leasehold, and you can see valuation cost 1st April. So this cost, which is this is for 30 million, but it is from X7, but we need it for we are preparing account for March 31st March, right? See
Yes.
this 31st March 2009. It means 1st April 2000 X8 to 31st March
Mhm.
X9, right? I'm
Yes.
gonna write it here so you know. So our tax year end is 1st April 2000 X8 to 31st March 2000 X9. So this is being when we purchased it. This is we will require this value for depreciation, right? For depreciation purpose. But our period will start when it says the company is revalue the property at the year end,
Mhm.
each year end.
Mhm.
It's a company policy to review or to revalue all the property at every year end. So the
Mhm.
value for this year will be
25.2.
yes, the value for this year value for
Mhm.
uh, from for 1st April 2000 X8 is 25,200. This 25,000 we are working in
Mhm.
thousands, right? So for 2,500, 25,200 is our start value,
Mhm.
and the valuation of the in the trial balance of 25 million led to an impairment charge of 2.8. Okay, there must be an impairment somewhere on the. We'll see if there is any impairment. Okay, then we will create a impairment. We will minus this 2.8 million from the when we from the lease property when we do this SOFP. I'll show
Mhm.
you next. This one is done. So let's see what next is there, which has a reported the profit and loss. Okay, this 2.8 will be reported to profit and loss. So you need to highlight this that this will report to
Mhm.
and the comprehensive income. Okay, the property valued. Okay, by the end
Oh, so it's
year
giving
end.
you the value.
Now that they have given us the value again, so
Mhm.
they are saying 2020 24,900 24.9 million by the
Mhm.
end of this like last reporting date. So this we can consider this as our this is the balance for our 1st April. You can consider this as a opening balance, right?
Mhm.
Now we can consider this as a closing balance, which is value at for
Mhm.
value as at 31st March 2000
Mhm.
X9. So now the value has been increased to 2,400 to
Mhm.
4,409. 24,900. Sorry, 24,900. We are working in thousands.
But it was an impairment where it says an impairment
Yes,
charge.
I'll show you. I'll show you.
Yeah.
And then,
Okay, sorry.
and then I will show you. The life was 15 years, right? 15 years. 1 year has already been passed here. It was 15 years. 1 year when in 2000x. Now the life is 14 years, right? Now we will calculate depreciation. How we will calculate depreciation? 30 million into 30 million. You can write for the examiner, multiply by 1/4, or you can write just divided by 14.
But why is it 14?
Because the 1 year life has already been consumed in 2000x. This one, see this,
Yeah.
in 2000x, and we are preparing the second. This is being our second year. So the
Yeah.
life was 14 years. One year has already been gone. Now
Wait, hold on. But that's the cost. It says the 15-year lease property was acquired at that amount at 30 million. So wouldn't you do 30 million divided by 15 to get the cost of the depreciation each year?
No, I'm not getting how, sorry.
Because like if you do if because it said 15 year, it says was acquired.
Yeah, it was
Oh,
acquired 30, but if company is using revaluation model now, as per the 31st, see, as per the 1st April, the value is 25,200. Now we got only 14 years left, so 25,200 divided by 14, so it will give you
yeah. Sorry.
1800.
Yes.
So it will give us minus 1800 depreciation.
Okay, yeah.
Or now you will you cannot write only depreciation. You will have to write this way, is equals to 2000, like this. Either you can write 2200,
Or
or
you have to
yes,
do the calculation in it.
yes, if you write just 14200, you will might get a mark but not full. Is equals to this
Yeah.
divided by 14. It means 1800, and minus, click minus here, so it's minus, so minus 1800. So if you add these two, is equals to sum. So this is your value, right? But we said by the end of the last month, it's a revaluation gain. So take a minus. So I'm gonna re-show you. I'm gonna do it again. Is equals to, this is your our closing balance. You can see this is equals to. You can write this way for formatting. Just if you do the format, it will give you the nice look. Where is it? Yeah. So you can see. So this is my place one line, so the examiner can see the total, and do the same here. So he can see the line and make it double line here, this and this. So in this way, he can see these.
The differences, the two differences.
Yes, two differences. So this will be your revalued. This asset will be revalued by is equals to, this is the new value minus the old value. So it means the value has been increased by 1500. And now where you will take things, this is really important now.
Okay, yeah.
Now if we have done first a small calculation, we have done already. Now you can start moving things. I'll show you where to go first, where to take first. So this revaluation, depreciation will go to, it's already been decided, will go to
profit and loss.
But where in profit and loss? Depreciation, reducing balance in the, see this. No depreciation has yet been charged on any of the asset for the year ended. All, see this, all depreciation. Can I change
It's
the
cost of
highlight?
sales. Yes.
So it means we have to prepare cost of sales. Working to cost of sales. So they must be in the, maybe some in the some exams they will give the opening balance, but we in this exam there is no, in this
There is no
question there
cost
is
of
no.
sales.
Yeah, so you can see.
No, there is.
There is, yeah.
Yeah.
Cost of sale. Yeah, this one. So the cost of sale as per trial balance, So we have how much we have 234,500, right? And plus is equals to depreciation. Do write full leasehold property depreciation. So he can easily see. Now you don't have to write 1800. Write this way is equals to, do this, but we have to minus it. So minus this. So it will,
Wait, so hold on. So cost of sale, da, 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 da. So then we have to mine it. So you have
no,
to
no, no, I'll
add
show
it
you.
together.
No, no, I'll show you. This
Yeah.
you have to link. So in this way you link the cell. So he can see,
Oh.
uh, I'll show you what is the difference.
No, but wouldn't you add it to the cost of sales because it's increasing the
No,
cost?
this is what I'm going to show you. See
Okay.
here. Can you see my cursor?
Yeah. Yeah. It says SFASDF.
Yes, yes. On the formula bar, right? This is your formula bar. Can you see the formula bar on the top?
Yes. Yes. Yes.
Yeah.
Yes. Yes.
So this examiner, when he will look here, it means you just have the value. But when examiner look here, it means H4. He will see this value is coming from H4.
Oh. 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 Yes. 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 Yes.
So
Yes. Yes.
is equal to minus
Mm-hmm.
H4. It means you're linking this cell. So
Mm-hmm.
now he will come here. He will see, okay. Now he will come here. He will see,
Mm-hmm.
okay, this value is coming from
Mm-hmm.
H4. H4 is
Mm-hmm.
this. And see
Mm-hmm.
here. So where is this value coming from? See the formula bar, sum
Mm.
H3, H4.
Oh, so they need to see it. They need to
Yes,
see it.
yes. So you see this H9 minus H6. See this depreciation is equals to H3 divided by 14. So in this way, you will score more marks.
Mm-hmm. Okay, fine.
So this, we know this depreciation, we have this one we have to take anyway. We have done depreciation already. Now,
Do we need
in
to take that to the revaluation reserve or
uh,
OCI?
yeah,
Because it said
yeah, no,
revalued by.
we will. So
Okay.
this is why I have done all these already. So now we will
Mm.
see assets. So this is our asset side and see non-current assets. On the non-current asset, you can prepare your so the value will be this one. I'll show you. Where is it? See this 24,900. So
Mm.
NCA leasehold property
Mhm.
is equals to this. Enter. See this H9. This value is coming from H9.
Mhm.
H9. Done. This bit is done. Now let's go to the
Mhm.
next bit. So this is
By
we
the
have
way, yeah, can I ask, yeah, but is that complete? Because in terms of if you go up, yeah, if you scroll up
mhm.
on the no, if you scroll up on the question, yeah, can you see that? But we didn't use
No,
like
no,
the
I know
lease lib.
the lease
Okay,
liability. We have when I'll do it. I'll show you. Just hang on.
okay, okay. No, no rush. I guess we can get there.
No, 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 not yet. Then because
Mhm.
then I need more information. See this,
Ishan.
then
Oh
more
yeah, yeah,
information
yeah.
coming down for the
Okay,
lease.
yeah,
Then only we
yeah.
will do the lease one. I'm just preparing those things now. Like we will assemble things one by one. So this
Okay,
bit
sorry. I'm
we are done.
rushing.
Yeah,
I'm
yeah, yeah.
rushing.
No worries, no worries.
Mhm.
Okay, owned plant. Okay, it means there is no leasehold property. We owned the plant. We owned it. Okay, reducing
Mhm.
balance method 25%.
Mhm.
Okay, owned plant is depreciated by 25% per annum. Do we
Mhm.
have any plant here? Which
Yes.
one is
Second
plant?
line. Second line.
Yeah, plant owned at cost. Can I change the highlight? Yep.
Yeah.
Okay,
Mhm.
this one now.
Mhm.
So this is cost of sale is open. So these are the headings. You can do this.
Mhm.
You can do this and you can do this as well. Where is it? So this working one. So this is from working one.
Mhm.
Cost of sales, sales whatever minus cost of sales. So this will be your value working 2. And now we need to prepare working 3, which is owned plant. Owned plant. You can give PPE, but use the same word as the trial balance. So examiner can easily see if you write PPE. So in PPE, there are so many things in PPE. So examiner will get confused. So if you write as it is, if you see owned plant, just write owned plant. So on plant is 20,000. Okay, 20,000 is on plant, and then on cost. On plant, this is accumulated depreciation. So it means if it is cost base, cost mine. So we know cost. Cost minus accumulated depreciation minus any impairment. Right? We calculate this way. So let me see if anything is there now. On plant is depreciated 25% per annum on reducing balance method. Okay, and when we bought it, did he give any on plant and machinery on note number 1? Okay, this is just round number 1. Okay. Okay, and the right of the plant was acquired on. Okay, the right of this use of plant was acquired on April 31st. Oh, sorry, April X1 rental or okay, this is the lease one.
This is the
Remember,
lease.
yeah, lease. So IFRS 16. So we will have to prepare what things right of use. Then we will depreciate the right of use. Then we will on plant everything. Okay, now let me see where is that on plant.
No, but I see this plant here. I think it's if you go up, yeah, if you go up, I think it's simply taking that plant figure
Yeah,
and then
yeah,
you've got the accumulated depreciation
yep. So
underneath.
this is I'm gonna do. So on
Yeah.
plant is valued 46,800. So they see this 46,800 and
Yeah.
accumulated depreciation, which is this. See this accumulated depreciation
Yeah.
12,000. So
Yeah.
depreciation as per trial balance, you can write depreciation as per trial balance is equals to minus, because we need to minus it, minus 12,500. Okay, and let me see if it is this accumulated depreciation is up to 31st March X8. It means 1 year we used, right? We used 1 year as well.
Oh, wait, hold on.
Because see this,
Yeah.
this is accumulated depreciation as at 31st March. But we are preparing accounts for 31st March X9. So
So
it
you need
means,
to do you need to get the answer and then times it
yes,
by
I'll show you. I'll show you.
yeah.
Come here now. See this. I'm going to underline so you can see is equals to the cost plus, if you plus it minus, so it will minus, right?
Yes.
34,000. And it in the exam it says, can you see my cursor?
Yes.
See this reducing balance. It says reducing balance.
Yes.
So it means reducing balance. You know the reducing balance, right? So it
Yeah,
means
you have to times it by 0.25.
no, no, reducing balance means after deducting accumulated depreciation,
Yeah.
depreciate after deducting depreciation.
Yeah,
So
yeah, yeah, yeah.
we do not take 25% on the cost. It is wrong.
It's
Take it
wrong. No, you have
on,
to take it
yeah,
from
yes. So
34,000.
depreciation is the right. Now you can write depreciation for the year ended 31st March. It means for this year, March 2000 X9 for this year is equals to minus this multiplied by 25%. Enter. Now is equals to this plus this. This is your
This your net current.
yes
That's your net
carry value, carrying
carrying
value,
value.
or yeah, and net real net book value, net book value.
Yeah. And
Now
then
you
that
can take,
eight
yes.
seven eight
Now
five
I'll show you
needs to
now.
be added to thing.
Yes, I'll show you one by one. We'll do it.
Yeah.
Then
Okay.
this is on plant. On plant. We will add is equals to this value is coming from here. Enter. Then cost of sale. This is owned plant depreciation is equals to minus this, enter. We will not take in cost of sales, we will not take which value I'll show you. Cost of sale, we will not take the previous depreciation because it's already been cumulative depreciation. Do not take a cumulative depreciation because it is already in the this one. See this. This is already in the trial balance. It means this trial balance entries has already been processed. So
Yeah,
if you take
everything in the
again,
trial balance is already been, so
yes,
okay,
already
so
been done.
okay,
So if you
it's
take
already
it
been done.
again,
Yeah,
it means it's gonna be duplicated.
double counted.
Double counted, yes. So this is
Mhm,
done already. So plant and
mhm,
equipment, this is done. So we have taken
mhm,
this effect to asset side, we have taken
mhm,
this to depreciation. If you do
mhm.
this way, you will easily cope the whole question. Otherwise, if you don't follow my like the way I did it, if you don't
Yeah,
follow this, then you will might miss anything. Or have I done the depreciation? Or have I done that or not? But if you do in one by one each line and
mhm,
double entry, that is why I remember always told you to teach you with the double entry. So NBV,
mhm,
where to go, NBV assets done,
mhm,
plant depreciation we sorted, done. So
mhm,
now
mhm,
you
mhm,
will be very clear about the lectures which I gave you.
mhm.
Now the right of return. So now we are doing the right of return. In this way, we in right of return we have to do two calculation. One is the right of return, the one we have the right, and the right will be depreciated. The second one is the lease liability. So we will do the lease as well.
Okay, that's where it confused me a little bit.
No, it's IFRS 16. So that's why
Okay,
I teach you the standards first before we jump to the final account.
yeah. So because everything, basically, it's just the stand. So in these notes, it's
I will
just
show
about
you.
the standards.
If you want, I can easily show you. This is, see
Yeah.
this. This is IFRS 16.
Hmm.
This is on plant IAS 16, which is
Yeah.
PPE. So this
Hmm.
is leases. Now we're
Mm,
gonna do IFRS 16 again.
hmm.
Leasehold IFRS 16 leases. In leases, you will get right to use, and you get the lease liability. You get the liability to pay as well. So we need to pay. So this is working for now right to use, right to use. So we can say right to use. Where is it? Right of use was acquired
Yeah.
on 1st April
Mm.
X.
Also,
The
you
rent.
know what? If you scroll up here quickly on the working on our workings. No, no,
Mhm.
no, no. Yeah, that one. Okay. Yeah. Fine. 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 Okay. Yeah. That's okay.
Okay.
Thank you.
No worries, mate. Right to use now. So right to use. So this is a lease payment. Now it comes lease payment. We will do the lease payment now. I'll show you only. Wait. Right of use plant was acquired. This rental is 6 million per annum for the 4 years in arrears. Okay, the right interest rate implicit 8%. Okay, right of the prime depreciated over the lease period. Okay, so the lease period was 4 years. So this depreciation will be calculated for 4 years. Right of use depreciation. No depreciation has yet been charged on any of the non-current asset. It was not being charged. That is why we are charging it now. And all the depreciation goes to cost of sales. Done. Now I'll show you the right of use. They must have given us the value. You see this right of use. This is I was looking for. Right of use trial balance value is 20,000. It means the value is 20,000.
Yes.
The cost on cost. And they have given us the cumulative depreciation as well. It means
Yeah. So you can
this,
work out the carrying value at
yes.
the
So
as a yeah.
depreciation, accumulated depreciation, as per trial balance.
Yeah.
How much is it?
5,000.
Minus 5,000. Okay. Now after this, we will have to calculate. See this now. I'll show you this. This it means 15,000. Now you have to be very what do you call focused.
Hmm.
Okay, so it says this asset, we bought it for 4 years. See see this my cursor. Right of asset depreciation over lease period. So lease period was 4 years. So
4 years.
yes, it means 2000x, 2000x8, 2 years gone.
hmm
And now we are on 2000x9. So it means out of 4 years, we need to do only 2 years depreciation.
Wait, hold on. The right of use acquired. Da, 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 da.
Depreciation over the lease period. They are saying that do depreciate this over the lease period.
mm. Okay, yeah, I get you. But when you say that over the lease period is 4 years, yeah, that means I'm
Wait,
looking at it.
okay, wait.
Yeah,
Just hang on, let me see.
sure.
5,000. So 20,000. Just hang on, let me read again. The rental are pay 6 million per annum for 4 years payable in areas. Okay, and the interest rate implicit. The right of use is depreciated over the lease period. Let me see lease period. Where is have we? Can you see any lease period? Right of use is 20,000. Just hang on. Okay, now got it. No worries. See this. It's for 4 years, right? It is actually for 4 years. So 2000 x1, x to x8, 1, x 1, 2, and this being the last period. So I'll show you. Let me write it here. 1st April x7. 1st April x8. So this is 1, period 1, x9. So let me see how it has calculated. Let me see, just hang on. So 20,000, 5,000 is gone. So 15,000 is there. So 15,000 into okay. Now see this. So we will see this owned plant because we owed the we plant and the right of plant. We consider both of them as 25% depreciation or on reducing balance method. So we will calculate this as well as per reducing balance as here it just shows. If you want, you can do this or I'll show you both ways. So depreciation is on reducing balance 25%. Okay, so like this, I'm gonna show you is 15,000. Wait, 15 is gonna be on 24. Just hang on, 20,000 multiplied by 25. Okay, that's gonna be on 4 years. No, definitely no reducing. It's gonna be on 4 years. Temporary 4 years. 4 years mean. See this way, 100. It's going to be a tricky one. I'll show you. It says right of use asset depreciated over the lease period. Lease period is 4 years, right? If we
Yes.
say 4 means 25, 25, 25, 25, it means
Yeah.
this in this way we will consume, right? And it's going to be reducing balance. Now we will say depreciation will be 15,000 multiplied by for 25%, multiplied by 25% for this year. So no matter if it is 3rd year, no matter if it is 4 year, is it gonna be the 2nd year? Well, he says depreciated over 4 year life. So 4 year life, we can consider 4 years is 15,000. If I consider this, then yeah, it's gonna be the
But
same.
yeah, but do you know what? You know how you can also check as well, yeah? Because we acquired it 20,000, yeah? So 20,000 times the 2007 times the next year, would it be 5,000? Yeah, it is. Yeah. So you see the 20, yep, I
Yeah,
understand.
20,000 multiplied by 25%. Yeah, True.
It's
Yeah, because
5,000.
we 25%, 20, 25, 25. So we need to
Five,
take
yes.
this on cost. Yeah. So this is 5,000 for this period. So is equals to, so this will go to your NBV. This will go to your non-current assets. Here, a right of use, which is,
Wait, hold on. But wait,
yeah, yeah.
wait, wait. Is it? Yeah. Wait, hold on. That because you
No,
see that
this is,
5 years was.
this I have taken as 20,000 into 25%, which is as they said, 20, you can say this
Yeah.
20,000 divided by 4-year life. So 20,000 minus
Yeah.
4, sorry, 20,000. This
hmm
is your life divided by
hmm
4-year life. See this
Yeah.
4-year life. So payable in 4 years,
Yeah.
and depreciation. See my cursor. It says right of use
Yeah.
depreciation over lease period. Lease period is 4
Yeah.
years. So,
And when they do that,
huh?
when they say that, it's like straight line method.
Yeah, straight line. When they say straight line, this is straight line. But when they say specifically, they have mentioned, then
Yeah.
we will do the specifically. Then we will have to do the reducing balance. Now they said divided by 4, like 4-year life. So we're gonna use the same. So depreciation cost of sale now. So we will get that right. This is for right to use
hmm
depreciation. So this is equals to minus this 5,000. This is done. Just hang on. Okay, done. Now we will see any other question. This bit is done. This whole bit is done. We dealt with this. Right, I'll show you. Is there anything from here? This is done. Now the lease one. Lease liability now. Okay, lease liability is, see this. Lease liability is mentioned here. Can you see lease liability at, remember IFRS 16, what we do? Do you remember that full performer which I used to give you?
Wait, say that again, slowly,
Opening
sorry. Say
balance,
that again.
opening balance. I'll
Wait,
show
wait,
you.
wait. What's this for? What is this part for? Sorry. This is
IFRS
for the
16
next.
leases.
Yes, yes, but it
So
just
opening
depending
balance.
on if it's in arrears or if it's
Yes, that one.
yes.
Interest, which is 8% for in this question, then
hmm
payments,
hmm
and
And
then
then you have your
balance.
carries forward.
Yeah, balance
Yeah.
or carry forward done. So it means the balance for the beginning, at the beginning of the year. So this is our year opening balance, which is
hmm But why do we?
15,600.
What are we trying to work out here? Oh, because there's a
Oh, no,
cost. There's a cost
it's a cost and liability. Remember,
and a liability. You have to find it. Yeah.
it's gonna be on amortized cost. We
Cost.
will
Yes. Yes.
record
Yes. 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 Yes.
this
Yes.
on
Yes.
amortized cost, and
Yes. Yes. Yes.
you can say IFRS 9, or
hmm
this one is the leases, so IFRS 16.
hmm
So what will, as per the balance, it says 15,600. So we will put 16,600 here. And we will say, where is the annual, is there any, see this, lease payment. So we made a payment of 6,000 as well. So it means lease payment is 6,000.
Yeah, and
So
it
minus,
shows you. It shows you also in the question. No,
yeah,
down, 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 no,
down.
down. It tells you. Look,
Where is it? Where can I see it?
you see where in red, yeah, it says
Mhm.
the right of use acquired. The
Yeah.
rentals are
Rental
6 million.
6 million per annum
So they're
in
even telling you
areas.
twice.
Uh, they could be, they
They've
could put,
shown you
yeah,
twice.
they've shown you twice, but they are showing it in front of right of use plant. They are writing it in front of this because they wanted you to they wanted you to know that we got
hmm
this asset on lease. So on
hmm
lease, we get two things. We pay, we got the
hmm
right to use the asset. We cannot
hmm
consider this as our and like net like our non-current asset. We do not own it, but we
hmm
actually got it on lease. So we book the depreciation, we book the asset, plus we book on the other side, we book the liability as well. It means it is not us, it is not our PP or our plant. We still have to pay lease on it. We still have to,
hmm
this is our liability. So one side asset will grow, on the second side liability
hmm
will grow. So see this 15,600 is the opening balance. 6,000 will be the equivalent every month, every year we will pay 6,000, no doubt. And you can say, see this now, it says the lease payment paid on X9. So it means this is your balance for 31st March X9. See, you can see here. So this balance is 2000 X9. And you can see here,
Wait.
this
No.
value is not
Oh.
given on this value is not given in 2000 X9. It means 2000 X8. For the whole year, this amount 15,600 was outstanding. So we will have to pay interest on the outstanding amount. So it's equal
Yeah.
to multiplied by 8%.
Yeah.
So it,
Wait. But what year is this for? What year is this one for?
Actually, this is why I just showed you. See this in the
Yeah.
exam, it shows you. This is the full opening balance. This is the start of the beginning of the
Mhm.
year, and this
Yeah.
is at the last day of the year.
Yeah.
6,000.
Yeah.
It means
Mm.
the full year 2000 x 8. The full year this 15,600 amount was
Mm.
outstanding. So that is why
Mm.
we are paying 8% on this amount. And on the last day, X9, we paid 6,000. This is X9, we paid 6,000.
Mm.
So if you want, I
Okay.
can show you. If you want, I can show you this way. That opening balance is 31st, 1st April. 1st April, this I'm gonna write it in front of here. Opening as at 1st April 1st April 2000 X8. So this
Mhm.
balance is outstanding on first day. This period, the whole month was outstanding. So we have to pay interest. Are you getting? I'll show you in this way. So this is our opening balance. If you want, I can write it here. 600. It is for, now you will be more clear. Carry forward, balance brought forward. I'll show you brought forward. I'll show you now. This is your balance as at opening as at 1st April 2000 X8, right? This will be your opening. And I need one line here now. Okay. And you can see the balance outstanding. Balance outstanding. So these are the dates. So I can show you the dates. So this is this a closing balance here now will be the opening balance in the next year. 15,600 for tax a full year. But it was being outstanding for whole year, right? Now the whole year is as balance as at. So I'm just going to write the date 31st.
Mhm.
It's going to be 31st because the low closing date 31st March X8. 15,000. The 15,000 are outstanding, so we have to pay interest, 8% interest. So 8% interest is there, is equals to, see this, 15,600 was the balance, plus we have to pay 8% interest, plus is this. So either you take a sum of this. So it means,
Well, can I ask you? So you see that one there, oh 08, this one, you see that 13 March oh 08, yeah.
mhm.
We don't actually use any of those figures. We just want the
Oh
lot. We just want the year end or that
yeah,
9.
this is,
Okay,
oh
yeah,
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 it's X9 because we're gonna use
yeah,
the whole year it was outstanding X9. So
yeah,
15,600 will be the balance X till X9.
yeah.
So we have to pay 8%. If you sum this, it means by the end of the X8, X9, your balance is 10,848.
Mhm.
Now it will be the opening balance for the next year. This will fall up to 31st March
Mhm.
uh, 2000 Y0. So I'll show you. This is the way it works. If
Mhm.
examiner gives you X8, X9, and it means X8 1 year,
Mhm.
X9 2 years. I'm gonna show you here. This is
Mhm.
this is really important. If you get any tricky question,
Mhm.
X8 2000 X9. So this gonna be for 1 year, this is your second year, then you
Mhm.
cannot write 2000. So 2000 x 10, you cannot write this. It's gonna be
You
2000.
can't.
Yeah, you can't.
X, oh, Y 0.
Yes, this is gonna be a
You
30, but
know, I was very worried, I thought, yeah, that, when it goes to Y, it means 10.
no,
So
no, no.
like,
Yeah, yeah,
do you understand? So like,
yeah, yeah.
no, but imagine, like, I thought that that would be maybe like 2 years,
Yeah,
because it's
yeah, I
like
get you.
Y.
Even I
Do you
got
understand?
confused. I was not sure, but when I took
Hmm.
the classes, that teacher told me. I said, "Oh, oh, I didn't know this." So
Hmm.
X9 same is for the Y or Y from Z. If you go
Hmm.
2000 Y9, so the next will
Hmm.
be 2000 Z0.
Hmm.
So the next year it will be this. So is equals to this amount into 8% again.
Hmm.
So you will take this is equal to sum, because this amount is in arrears. So you
Hmm.
can see either see this is the tricky point. Examiner
Hmm.
did not tell you in the question it is in arrears, but it did actually see this in arrears. But
Hmm.
in case he did not write in arrears, how would you find? You can easily see here the date. When are we paying our rent? We are paying our lease rent on 31st. It means it's the last day of the month, last day of the year we paid the rent. It means we are paying in arrears. Either he can give
Hmm.
you the date, or either he gives you in writing. But this exam, in
Hmm.
this question, examiner gave you in both way. He gave you in
Hmm.
writing arrears and in trial balance date as well.
Hmm.
So
Okay.
how we will take it, I'll show you this. Now
Hmm.
the final, what things will go here. So
Hmm.
this, we are preparing accounts for 2000x9, right?
Hmm. So
So
then that will be an expense.
this will be your finance cost.
Finance cost, yes.
Yes, this will be a finance cost. So we need to see if we are taking the finance cost, where we are
Yeah, we
taking
need
the
to, yeah,
finance
and we
cost.
need to see if we have finance costs in the trial balance.
Yes, so that one too, finance cost.
Hmm.
So let me see this, hang on. We do not have on the trial balance. So
So we
what
have
we're
to
gonna do?
create it.
Yes, so you can see there is no one in the trial balance. Now we can
Hmm.
go to our main format. This is our main format. So I
Hmm.
know there is a cost of sale is, there are a lot of things to do more, but we
Hmm.
gross profit. This will go to gross profit. This value will go to gross profit. Then
Hmm.
leave one space. Then you need a finance cost. Now let add finance cost.
Hmm.
Finance cost, where is this coming from? W5, I guess. So is
Hmm.
equal to, now we have to minus is minus, where is it? Where is it? Finance cost, this, enter. So you can see finance cost is there. Now, once you're done with the finance cost, the second step is the current liabilities and non-current liabilities, right? So remember, this is your closing balance. Out of this, 5716 is still outstanding. It means this is not being um, removed. This
Oh,
will
wait,
be,
wait, hold on. Do we need to do the next year after as well?
yeah, it is because we need to know the
The
current
current
liabilities and non-current
liability.
liabilities. So you can
Yes,
see
yes, yes.
total is this minus this. It means this is your current liabilities, because this
Yeah.
is uh, eliminating within this year. So
Hmm.
this will
Hmm.
go to your current liability. So you can
Yes.
take, um, where is our non-current asset? So
Hmm.
leave lines. You can
Hmm.
equity and liabilities.
Hmm.
So equity section you can leave here, and then you can make liability. In liability, right
Hmm.
here somewhere, current liability working 6 is
Hmm.
equals to this. This is your current liability, and you can write it here, non-current liability working 5. This is coming from working 5. is equals to, because this is still outstanding. The whole year in 2000x0, the whole year is still outstanding. So this is your current non-current liability. So this is the two things has already been pasted. So we know this bit is done. Did you get it? Now what we're gonna do is, let me see, statement of profit and loss. What else is there? Let me read the question next. In the exam, it will not take much time if we do the practice. We are taking here now in the live now, because I'm just teaching you one by one. That's why we are
Yeah,
taking more time.
it's the time, but you don't
Yeah.
have this much time in the exam.
Yeah, definitely no. You need to finish this in maximum 50 minutes, max 50 minutes, because you know
Seriously.
you cannot spend more time. So I enjoyed final account more. I was getting scared of consolidation, but luckily I got final account. The moment I saw the final account, I started it in 45. I know I wanted to finish in 45 minutes, but I think I must have finished in 45 minutes because I wanted to get spare time for other questions. Other questions are more lengthy, like 2 marks takes more time of you because you have to read the question, then do the calculation, give the answer. Okay, next one is, so let's read the next one. This is, we're gonna read it now.
Yeah,
On,
this one I think is to do with like contracts and stuff, but
yes,
I'm not
IFRS
solid on it. I'm
15.
not very solid on it.
No worries, I'll show
Yeah.
you. I'll show you. Wait, wait. I will read out the question. I'll show you. Okay. On 1st October, price will enter into a contract with the bridge over a river. Okay, bridge over a river. Okay, obligation, performance obligation satisfied over time. The agreed price of the bridge is 50 million and the construction was expected to complete by XY0. Okay, 14.3 million in the balance. Okay, this is your material cost. This is your plant specialist plant. Okay, and payment from the customer is this. Okay, sales value of the work done has been agreed on 22 and the estimated cost to complete is this, and the special plant will now have no residual at the end of the contract. Should be when depreciation monthly basis. Okay, when if it says monthly basis, when did we start? We start on 1st October, so it means October, November, December, January, February, March. We got only 6 months. Did you get it?
Yeah, I think so.
No, see this October, and we are
Yeah.
preparing account for 31st March. So October to March, October, November, December, January, February, March, 6 months.
Yeah.
So
Yeah.
the contract specialist plant acquired is, this is going to be our non-current asset anyway. So this is 8,000, right? And we have to depreciate it. So it means we will not depreciate for a whole life. We will depreciate for 6 months. I'll show you one. We'll do the question now. I'll show you. Come here now. This is Leases. This bird must be working 6. Now working 7. Working 7. This is a specialist plant. So we are creating a right of use, like the assets. So it means we bought it. I'll show you. Plant is, the actual cost is 8,000. See this 8,000 here, acquired for 8,000. And the first sales value work done. Okay, now next one is depreciation. We have to calculate depreciation. How? We will calculate 8,000 is the cost into how many years is there? Let me see. See this 31st, expected to complete on 31st XY. So how many months we have? So October to X1. See this X8. Can you see my cursor?
Yes.
See this. This is the day we acquired, and it is the examiner did not give you the life of the asset, right? But we can calculate. He told us that the construction is expected to be complete on 30th September XY0. It means X8 to X9 1 year, X9 to Y0 2 years. So this asset has 2-year life. And you can see this, the asset will have no residual value at end of the contract. It means depreciation, how we calculate depreciation. I'm gonna write it here. 8,000 multiplied by and divided by 2, which is 2-year life, multiplied by 6/12. It means 6 months, is equal to, this is the way you can calculate, is equal to minus this specialist multiplied with 6 divided by 12 divided by oops and multiply by 1 divided by 2. You can do this way, easy, is equal to 2000. Did you get it?
Yeah, I get it. I get it. Also, you know, when we're done, yeah, can you please save this and then send it to me by email as well?
Yeah, no worries.
Okay,
So this
thank you.
is, we will do this and then we will take it into the non-current assets. So non-current asset is this, where is it, our non-current assets?
But this seems a lot to be able to do in 15 minutes, you know.
Yeah, it takes time, but the more you practice, the more you will learn. So this is specialist plant, specialist plant. Even examiner knew that he will not be able to match the balance the assets and liabilities, but the more you do, the at least you can recover. So this is coming from, is equal to, this is coming from, this value is coming from here. Yeah, net book value. So net book value is this. So you can, so this is working 7. So you can do this, highlight them so they know this is lease, this is, so you can easily see right to use, this is right to use. And after, before end of the day, before you finalizing it, then you can do this, you can make in this so it looks more elegant.
Neat.
Yeah, not neat, but don't do it during the exam, do it if you have spare time.
Oh yeah, you don't have time to do that.
Yeah, otherwise
Like,
you will, otherwise you will score full 30 marks on this question and you will not have any time to do the rest of the exam.
That's true.
So we have to be very careful. So this is done, this bit is done. Next one is, let me see, where is the, okay, where is where okay, now is IFRS 15 time. So we will see October, we acquired on October. Okay, so estimated selling price, remember we do this. So selling price is, first we need to see if we are getting profit or not. If we get a profit, then we do the second step. If we are not getting profit, then the whole loss will be
The whole
booked.
thing is a
Yeah.
loss. Yes.
So selling price. So I'm just writing selling price. I'm not going to write full 50,000.
And these are contracts, and this is about revenue.
Revenue contracts. Yeah. And it says and the construction are expected to complete this 14,000 million and 15 is a cost, this. He must have told us yeah, material and labor cost. Okay, he's saying 14.3 million is expected. So remember how we will calculate profit, sale price minus our expected cost, it will give us the profit. So estimated cost. One is to date. So to date, estimated cost to date, it means up to this date we have done the costs. So up to this date we have spent 12,000 on material cost. This is payment, this 5,000 is payment, is not the cost, so ignore this one. Sales of the work has been done, this estimated to complete is 10,000 excluding depreciation. It means we have to add depreciation on it, so it's going to be 10,000
plus
let me see, excluding depreciation and to complete. There is one point in here, I'll show you which one is it. So 10,000 is the cost, the sale the depreciation over the monthly basis recognize progress towards the satisfy obligation output basis. Okay, they are using output basis by the agreed work to date compared to the total contract price. Okay, so the plant, okay, the plant cost is 8,000. So this is our plant cost, which is 8,000. And I'll show you now. Where is the depreciation one? Excluding plant depreciation. Entered into a contract of the bridge. Performance obligation. The price of the bridge is 50 million. The construction was expected to be completed on. The sale value is 22 million, and the estimated cost to complete is 10,000. This will no residual value at the end of the. Okay, sweet. So it says there is no value. It should be
There's no
depreciation or
depreciation.
and plus there is one thing, because this is not our project. This is we are actually working for someone else. So who he bought the asset, he will book the depreciation. The price, because we are acting as an agent, you can say, towards the satisfaction of the performance and determined. Yes, done. There is no, we don't need to calculate depreciation. So is equal to some opening bracket. So we will see if we get a profit or not. We did get a profit. It means now the second step is we will book, we will see as if it is our asset or if it is our the thingy. And you know what, one more thing, this excluding depreciation, we will calculate depreciation, but not in the what do you call, in the profit side or calculating of the cost, because the depreciation is how can I say, is not linked actually on the profit. Because all we do is we, for calculating profit, we will just see the cost, a sale price minus cost. This depreciation will be on the SOFP side, on the SOFP side. Then we will have to see if we are acting as an agent or we are actually doing it for us. I will we'll go then in the next stage. I'll show you. First, in the first thing, we need to see whether we have a profit or not. We did get a profit. Second stage is uh, if like output method or input method, but they are using, they have set it already, output method. In output method, we know that total sale price divide, where is it, sale value, work certified divided by total value. I'll show you here. So output method, they are using output method, and it says work certified to date divided by total cost, total say price, total contract price, sorry, total contract price. It means our total contract price was is equals to total contract. See this now, see my cursor, 22 million. So we says 22 million work has been certified. 22 million work is certified divided by 50. It means into multiplied by 100. It means 44% work has been done. 44% work has been done into 100. 44% is done. Can we, if I write 100%, nope, it's still giving me the same. Okay, 44% work has been done. Now what do? We remember we take 44% of the profit in case we get the profit. We take 40, we can book. Now it means out of this 20,000 we can book 44% profit. So now we will prepare revenue. We can book a revenue. How much is it? 50,000 was the revenue, but so work certified is this into percentage, 22,000. It means we can book 22,000 as a revenue. But one more thing, either you can take, I'll show you. I'll show you. So this either you take this 20,000 into 44% directly. But we are preparing, it is not MCQ question. We have to prepare like profit and loss. It means
Mhm.
if we are booking revenue, then we have to book the cost of sale as well. So the cost of sale, you have to book the cost of sale as well for this. So the cost was, total estimated cost was, where is it? I mean, they must have mentioned, let me see if I can add these two, three. Yeah, see these three. 12,000, 10,000, plant cost 8,000. We specifically bought this plant for this project. That is why we have to do the depreciation, but that depreciation will not affect our profit in revenue. That depreciation will go to that statement of financial position when we book the asset. And we have already done that. I'll show you. We have already done that. See this depreciation 2,000, and we have already charged this to profit cost of capital, cost of, where is our cost of capital? Yeah, there. Oh, we have not done it. 2,000 is coming from specialized plant. We actually bought it, specially we bought it plant. Now I'll show you, where is it, where is it, where is it? Where is it? Oops. Where were we doing calculation? On plant, yeah, IFRS. Book as revenue. Revenue from contract. Okay, so see this. So if you add these three, this plus this plus this, it means 30,000. So we have to book 44% of 30,000 as well into 44%. It means we are booking
We're
44%.
booking the revenue
Both,
and we're booking
yes,
their cost of sales.
yes.
Okay.
So it means we are booking 44% of the, oh come on, we are booking 44% of the total contract price, and we are booking 44% of the our cost as well. So cost is this minus this, so is equal to, so this is our profit to date. It means for this period we made this profit to date. So now you can take this amount to cost of sales here. I can do this in X, copy X. This is your cost of sales. Yeah, add this in a revenue contract. Revenue contract, you can write anything. Revenue contracts. How much is it? 13,200. And revenue. So now we can book the revenue. So go to revenue, always go to sales ones, right? So sales is, how much is the sales? Are we given any sales? Let me see our sales revenue, revenue or sales contract with the customer, 14,300. We will see where to post. Yeah, revenue, you can see 310,000. So is equal to 310,000 from the trial balance plus this 22,000 our 22,000 from our contracts, right? Sales. This is done. This bit is done. Now let's see which one is done. So I can highlight it. So we can write distribution cost easy. So these are the easy marks. Examiner will give you the easy marks. So he will give you like this distribution cost. All you need to do is just write distribution. So these are the easy
And
marks
when
you
you,
can.
if you just write in the distribution, you get 1 mark.
Yes, you get 1 mark because you place it on the right, because we don't have to do anything with this distribution cost. Okay, this is done, so I can highlight this. Oops, this is done. This is done. Inventory, we will do the inventory now. Okay, Now let's see. So the whole bit is done. This one is done.
Mhm.
Okay, next one is, wait, this administration expense is just the easy marks, 27,500 admin expense. Okay, next one is equity dividend, then okay. Now we will see, after doing this, we will see if we got the profit anyway. We know it's a profit. Where is it?
Mhm.
Where is it? Yeah, this one. Now we will book our SOFP, whether this asset is a contract asset or contract liability,
Liability.
SOFP side.
Mm.
So we will see um, cost to date, how much we have spent already. So
Mhm.
12,000, we spent 12,000 already on this seat, cost to date 12,000, and we bought the asset for 8,000, right?
Mhm.
And let me see the depreciation, how we will calculate depreciation. Yes, so this asset is for, they must have given us the right, see this. So they gave us the date, it means 2 years, life is for 2 years. So depreciation, so I'm going to write depreciation. This is SOFP side, so depreciation will go to SOFP. I think we must have done already. See this, we have already done it here.
Mhm.
So specialized asset is 2000. So we will take 2000 as well as depreciation. What else is there? Let me see. Let's go to the question. Okay, and we will say profit to date. If you remember all the IFRS 15, then only you can do it. Profit to date is 8,800. Yep, 8,800 is equals to 8,800. This is your profit. Then we will say payment. Now it means these are the cost. This is our profit. How much we already got paid already from customer. From customer, how much we got paid already? We already got 5,700. You can see here. It says, see this, for 5,700. Can you see this? We already got 5,700 from the customer. Now we just sum it is equal to sum. If you have the positive value or negative value, let's see. So it's a positive value. So it's a contract asset.
That's an asset.
Yes. If it is an asset, we will take it into the profit as a SOFP side. So
Mhm.
let's take it into SOFP side. Where is it?
But if it's a contract loss, does it become a liability?
Yes. Then it will.
Yeah.
It's a liability. So we will take
Mhm.
this one is say W8. So we can consider, go to the asset side, asset, and write it here. You can write on the non-current asset or the current asset, because this is only for 2 years. Then you can write it
Mhm.
in current assets. It doesn't even matter about if, as long as you write it contract asset. So a contract is equal to where it is coming from. There it is coming from here, 17,000. Now let's next jump to this one. These all has been done. These all uh,
Mhm.
what do you call adjustments. Next adjustment is revenue include 8 million for good it's sold as an agent. Okay, it means we if we sell something, we will not book the whole revenue. Suppose if I am acting as an agent for you and I am selling your iPhone, then I will not consider that I sold 5,000. I cannot book it as 5,000 because this is not my asset. So I
No,
will
it's not
give
your.
you the
Yeah.
money. I will give you the money and then I will keep my commission,
Mhm.
right? Now the same question is this. Now what they did, you know what, in the exam, you will have the same scenarios. Either in the exam, there are only two scenarios. Either there are some missing information examiner want you to complete.
Mhm.
Second is the examiner will give you the wrong treatment and you have to rectify.
Okay.
So we until now we were doing the missing one. Now in this we will do the this is not the missing one. It means it's a wrong treatment. So we will rectify this.
Mhm.
See this price well revenue includes 8% act as an agent. He was acting as agent, but he
Mhm.
include in revenue.
So it needs to be taken out.
Yeah, two things I wanted to tell you. One is already told you, agent should be commission, not the revenue. You
Mhm.
cannot consider this as your sale. You will consider your commission as an income.
Mhm.
Second one, if I have my building, if I sell my building, if I sell my non-current asset, I cannot consider this as a sale.
Mhm.
We will consider this as a disposal. We will you cannot say revenue always be like revenue is coming from ordinary course of business. That's it.
Mhm.
I cannot say that I sold my car or I sold my asset and I made my revenue is 2000 or my sale value is 2000. No, it was your disposal proceeds. That is why in every book, if you open the book, you will see disposal proceed in front of the non-current asset and sale or revenue in front of the inventories always. So these are the common things which may make mistake or which you can impress the examiner.
Mhm.
So this he included 8 million. So we have to take 8 million out of the sales.
Mhm.
And but the thing is, let me see, I'll show you. There's one tricky point here. Okay, so 20% and okay, one more thing. Suppose if I am working on commission, right? I will I will get my income on the things I sold, right?
Mhm.
Suppose your iPhone is 5,000. I will tell you that if I were able to make if you sell it, you're gonna sell it for 5,000. But if you give me the authority, I will work as an agent. I will instead of 5,000, I will give you 8,000. But I will keep my 20% commission. So it means I am keeping 8% on the sale price, which is 8
Mhm.
million. So one more thing. I'm going to write it here. Suppose W9, which is our revenue, and you can write commission. We don't know if it is revenue or commission, but we actually know 8,000 multiplied by 20%. It means 16. So 16. Oh, we are working in millions, so yeah, I'll change it. I'll show you. 1600. We were entitled of 1600, right? But what we did, we wrote uh, 8 million in sales, but we did another thing and the remitted the difference of 6.4 to including cost of sale. Wow, what we did is I'll show you what he did. He said 6.4 6.4 means 6400 minus 1600, 4800, and I'll show you one more. Let me figure out. Okay, so what he did, he said, see this, how you can calculate 6.4 million. What he did is he said 8 million is the cost price, is the sale price, is the sale price minus my commission. So agent did 6,400 into cost of sales. He booked cost of sales as 1.6 million, 6.4.
Mhm. That's wrong.
That's wrong. So what are we gonna do is from the cost of sales, I'm gonna show you. So that's wrong, right? So we will take this money away from the cost of sales. So we will do
Mhm.
this. Where is our cost of sales? This is our cost of sales. Commission revenue. This time we will minus it. Minus because we are minus deducting it from here. This. So 6,400 we will minus from cost of sales. But we did work 8, but we can take commission, right? 1600 is our right, so we can book it as a revenue. Do you agree?
Mhm.
So I'll show you income where he wrote the income. That means let me write. Okay, this let's read the question. Are we preparing profit and loss comprehensive income? Okay, yeah. The other comprehensive income, it will go to the other comprehensive income anyway. We will prepare that later. So that was it. Then we will see this. So this he has added 6.4 including the cost of sales, and he has done another thing. He has done 6,400, and he booked instead of 8,000, uh, the same for revenue as well. You know why? How he calculated, instead of he's supposed to calculate, he's supposed to take 1,600 in commission, but he said, I sold your machine for 8,000 and my commission is 1,600. It means 6,400 is my revenue and 6,400 is the cost, both. So we will have to minus 6,400 from the cost of sale, and we will minus from revenue 6,400, because this is not our revenue. Our revenue is 1,600. We will book the revenue in this is not our sales, so we will not consider sales. So minus 6,400. So this is our sale bit. So this bit is done. Now we will prepare the profit and other comprehensive income. There we will write that we will write this. Just hang on. Asset is done. Which one is left? Okay, done. Now we will do the next question. Oh, sorry, the same one, next bit. So this is the tax bit. Remember, we have done the calculation for tax. So I'm gonna write it here. Tax, deferred tax, and deferred tax provision and deferred tax. First thing we'll do this. I'll show you. Where is our deferred tax? So you can see there are two values given. Deferred tax. Remember when I told you, if you see on the debit side, it means it was
It's
under
a under
provision.
provision.
Yes, under provision from the last year.
Mhm.
Our provision is deferred tax. So what we're gonna do is, we will first thing we will, the moment you see this, you will write this. I'll show you where is it. Okay, where is it? Where is it? Go to your profit and loss, because tax will be on your profit and loss. Okay, so I'm gonna write it here. Tax working 9, I get working 10, I guess, or working 9. So you can go through. So 700 is here, right?
Mhm.
So I'm gonna write it first here. 700 from the trial balance.
Where is it
Now
a straight in expense? Isn't is it straight in expense?
this is showing an expense. Current tax, it means for this year tax.
Mhm,
Deferred
mhm,
tax
mhm.
means deferred tax is from the last year and future tax, because the
Okay,
last
yeah.
year tax we are paying now, and this year
Mhm,
tax we are we will pay in the next year.
mhm, mhm, mhm.
So this is 700. Just write 700 here first, right? It's not complete. It's not complete. We will complete.
Mhm.
Now jump to the adjustment. What he says. Okay. Estimated provision for the year. It means for this year we are estimating. Let me go to here. Estimated for this year. Estimated provision. tax provision, estimated tax provision. We are this year we might think that we have to pay. Where is it? We have to pay around. Estimated tax year is 4,500. It means for this year we are paying 4,500 for this. I'll show you. So this tax year plus estimated, this is here coming here, right? There's it's not complete. It's not complete. I'll show you. There's one more to add in it. So it means 700 is for, because the last year is we are paying in this year, right? Last year tax we will pay in this year, which is 700. That is why you can see the 700 amount here. Where is it? 700? Yeah, current 700. It means last year under provision. So we are paying 700 plus we are estimating this year is 4,500 for this year. So this is year 4,500. Now we will jump to the provision stuff. Now what we are provisioning. So we provision the deferred provision now. Now we jump to the deferred provision, deferred estimated deferred provision. So see, this provision is 5.6 million. Deferred provision is that we might think that it's gonna be 5,600 deferred one, 4,000, 5,600 deferred provision, but the balance and the where is it? But the balance from the tribe, how much we are paying now, how much is it? So see, this deferred tax balance is 8,400, which is deferred tax trial balance, which is minus 8,400. It means we create for this year, we estimated we have done more, we estimated more actually in this.
Mhm.
So it means we can minus this from the tax expense. So this we will minus this from the tax. I'll show you where is the tax one. So this one 2,800
From the 700. Okay.
plus this value. Where is it? This value done. Oops, no, it's not coming. Then we can minus manually 2,800. So if you add here, copy values, this is your tax, but tax is in minus, so we will have to minus this. It means, come on, so 2,500, 2,000 minus 2,400, we will pay tax. So tax is an expense. So this bit is done now. The balance in the trial balance represent under and over provision. I already told you if it is under or over, this has been done. Okay, now so where is anything left? Not on the adjustment. All the adjustment has been done. Now comes on the equity side, and see this trade receivable, easy mark. So trade receivable goes to current asset.
What's the current asset? Yeah.
Trade receivable. How much is it? Where is it? Trade receivable. How much is it? I can't. For misplaced. Where did I see? I just noticed. Yeah, here 33,100. Then inventory, easy marks. Inventory is 2,800, 200. Inventory. Then we have bank, easy marks. Bank is our current asset. Bank is 5,500. Then we have trade payables. Payables is about non-current current liabilities. Trade payable. Trade payable is 33,400. What else left? Okay, let me see what else left. So sales 325600 done. Now cost of sales. So we can add these. It is 258. Let me see our cost of sales. What values is there any missing? Let's see. Okay, yep, done. And there is 24900 and oh yeah, this was missing. See this. So the revaluation surplus 1500 revalued by 1500. Lease or property surplus on revaluation, lease or property 15. I don't know why he's minusing this from the cost of sales. I just opened the book because the batch it was not matching. Just hang on. Is equals to SUM and then 255. Just hang on. It's still 234 is matched. 13,000 it is matched. Then 6,400 minus matched. Let me highlight them. Let me figure out which one is missing. 13,200, 13,200. This is matched. Then we have 6,400. This is a matched. 1,800, 1,800. Yeah, is there matched. 8,500. Yeah, matched. 5,000 matched. Oh, okay. Yep. Is this done? So because this is, we have taken this into this one, this bit 2000, we have taken into the SOFP. So done. This is done. So it's equal to minus, because I just opened the book just to match if I am missing
Just to check
anything.
it.
Yeah.
Yeah.
So this is done. The gross profit is this plus this. So the gross profit is, yeah, matched. Then distribution cost, yeah, finance cost, distribution cost, admin cost, done. Then tax is done. Next is equal to sum. Yeah. So you do this as well. So just to make sure this and do this. So you know this is these are the final figure. This and where is under bottom? Yeah, done. Oops, I will save it later. So let's see. Yeah, this is this our profit and loss is done. Profit for the year. This. Oops. Now I'm just checking our assets. Assets are 66,400. Yeah, matched. Then we have other assets are 83,900. Yeah, that's matched. So total assets is now we are just finalizing it. 1500. Yeah, done. Now we will do the equity side. So in equity, you can see how some are unhighlighted. Retained earnings. So retained earning comes to in equity. So retained earning is, where is it? Our retained earning is 40,000. We just write it here. Retained earnings 40,000. Done. Then we have equity shares. This is retained earning.
Where do we put current liabilities?
Which one?
Where do we put current liabilities, or you're going to put it underneath
Yeah,
equity?
underneath. Yeah, you see this. I was having here. So 40,000. This is done. This one is done. Retained earning is, that is equity shares. This is equity shares. Then retain, you know what, in retained earning, we will calculate. I'll show you in retained earning. The profit goes in the retained earning, right?
Oh wait, oh you have to put the profit from that year.
Yes, retained earning,
Hmm.
because we are preparing financial SOFP retained
Hmm.
earnings. So that is why in the consolidation, I told you, if you want to do the parent is sold anything in higher price, the
Hmm.
URP will go to profit, and from profit goes to consolidated reserve. From consolidated comes to retained earning.
Hmm.
So retained earning trial balance. This is as per trial balance. Trial balance amount is,
Hmm.
see this, 40 44,800 is from the trial balance. And for the profit, for this profit for the year, how much was it the profit we made? We made a profit of 19,852. So is equals to 19,000, where is it? 19,852. So this, see this, add to, then we have a, so see this, we paid dividend, we always pay dividend from retained earning. So minus 8,000 dividend is equal to your closing retained earning for the SOFP is retained earning total closing one is this. So you can highlight this. So this you can highlight, go to your retained earning column, retained earning is equal to this amount. If you link those cells, you can easily see where it is coming from. Yeah, done. So let me see if now I open the book just to cross check everything matches. Retained earning 55,952 matched. This is matched. Okay. Now non-current liability, deferred tax. Okay. Yep. Where is it? Where is it? Where is it? Where is it? And lease liability. Where is it? 5716 done. This is matched. Then we have current liabilities 33,000 done. Then I'm just, if you want, I can highlight them so I know this is done, this is done, these two is done, is matched. What else is there? Liability, current tax payable. Yeah, for the current tax payable, it means where is it? Remember, I wrote here. So 7,700 we are having our liability. 700 is actually for this month, for this year we are paying. 4,500 is this. Where I'll show you. I'll show you where is it. 4,500 one. See this 4,500 we are estimating. So this is your 4,500 is your, you can say, current liability, because you need to pay this. So this is your current liability there, and tax liability. This is coming done. This is done. Lease liability is done. Yeah, all matched. And 5,600. See this. They see this now. 2,000x9. It means required more. This is the non-current liability. 5,600 must have wrote somewhere. Yep. So this is your tax non-current liability. That's it. Now it's matched. So let's see. It's equal to sum. The liability side is this. So let's see if it is matching. Yeah, you can see this. This is your final figures. I'm highlighting them. This is your final figure, total asset and total liabilities. Even if you are unable to complete full, if you actually done 80% of this question, you will score enough marks.
Yeah. Okay,
Yeah,
cool.
I'll show you. Let me save this for you and I'm gonna send it to you.
Okay, cool. No problem.
Okay. What do you call F7 practice? So we did in a very lengthy import. In exam, you will not have. You can
Not much
easily do it
time.
in. Yeah, you will easily do it. Now you can mine. Oh no, you can't do minus. You can play this out like this. Yeah, you can make it short. Done.
Mhm.
I'm going for a dinner now, and then
Okay, sure. Me too.
yeah. Then I'll
Okay.
take a break. No worries. Thank you.
Okay, cool.
Bye bye
All
bye.
right then. Hello. I'll send you my email address in a sec.
Oh yeah yeah. Please do. All right.
Okay.
Bye.
Thank you.